All right. I'm back, everyone. Uh, Thanks for joining me. This is now going to be my analysis stream, my regular time slot, Monday, 3 p.m., little after 3 p.m. Eastern time. And this is where I normally go over my Bitcoin analysis that I published on TradingView yesterday, or we also go over some other markets as well. If there's a market you want to see, please let me know in the chat. Also, if you want to share what city, what country you're from, it's always a fun fact. I'm streaming from the greater New York City area, also known as Northern New Jersey. Hey, how are you? From Greece, Konstantinos, how are you? I'm sorry, Constant. I can't even see it. I see your name. I know I'm not pronouncing it right, but hey, thanks for joining me. Um, so on Monday, Wednesday, and Friday, I stream the 9:30 open Eastern time, and that's where we day trade the Nasdaq futures. In fact, if you go to my YouTube channel right now, you could see today's earlier session. We had a nice little trade that worked out. So you can see that. That's every Monday, Wednesday, and Friday I stream at that time, and then Monday afternoon is when I do my analysis stream. I used to do the Bitcoin day trade at this time, but now that I do the Nasdaq futures during the market open, that's a much more appropriate time to look for day trades. Okay, so hey, Savi, how are you? Alex from Romania. Romania. Alex, I have a funny story for you. I was waiting for you to come back, Alex. Okay, so real quick, since Alex is here from Romania, I have to say this real quick. Okay, so Alex, uh, not the Saturday before, not the previous Saturday, but the Saturday before, I had the opportunity. I was outside. There was this new well, it's not a new barbecue place, but a new owner took over this barbecue place that's nearby me over here. So I happened to be outside, and I happened to be talking to this guy, right? And he mentioned, "Oh yeah, I just took over this place and this and that," and he had an unusual way of speaking, so I'm like, "Oh, okay, obviously this guy's not from this country." So I said, "So what nationality are you from?" He's like an older guy, right? He looks like a professor. And I'm like, "So what nationality are you?" He goes, "Well, I'm from Romania." I'm like, "Romania? You can't be from Romania." He's like, "Yeah, why? You know Romania?" "Of course I know Romania. I used to be famous there." Now, I left that part out. But I said, "I have friends in Romania." He's like, "Oh, yeah?" It's, "Yeah, in Bucharest." So he said, "Oh, you're going to have to try some Romanian food then." So he makes Romanian food, like which is not a really good idea in this town because people don't even know that Romania is even a country in this town. That's how ignorant people are. But anyway, so I went to his little place, and he made for me. He made mitate. Have you ever had mitate? I had mitate for the first time as I was watching Romanian soccer on the TV, and and I'm like, well, I need to prepare for my visit to Romania, so I'm getting some Romanian culture here. So I had some mitate. It was really good, and I had some, and he made some hummus. His wife actually made the food, and but he cooked the mitate. Are you familiar with mitate? I hope you are. Told me it's a typical Romanian food. Okay, so I just have to throw that in there. Also, there's one other thing I have to. I'll be right back. I got to show this to you. Hold on. I wanted to take a picture of this little thing that he had set up with all these like snacks and stuff. And they're like, no, don't take the picture because we have to complete the thing. So instead, she gave me this. Okay, are you familiar with this? From Romania. So I have this little treat here from Romania. And I was like, Alex is going to be very impressed. And Schwartz and all my Romanians. You see, apparently there are a lot of Romanians here in New Jersey from other parts of Jersey here, and that's who they like advertise to. How funny is that? Isn't that cool, Alex? from Romania. Okay, that's my Romanian rant. I just had to show this to you. I was waiting for you to come back on the stream so I could show this to you. And I've been saving that for like a week. It's been in my refrigerator. Okay, anyway, how cool is that? I think Alex left the stream. He's like, all right, I can't talk to this guy anymore. By the way, people, real quick, I just have to mention something. Um, if I get there's a phone call that I'm waiting for. Now I normally, I put my phone away, and I normally, when I'm streaming, I don't take phone calls. But this one's important, and I have no choice. I have to take this phone call. If I get the phone call during the stream, I apologize in advance. Okay, now, I'm not going to be on the phone long, but I have to take the call because I can't miss the call. So I just have to apologize in advance for that. So yeah, Alex, Romania, right next door over here. I was going to say, hey, Alex, I was in Romania. Look at the little treat that I got. Anyway, for my Romanians, I was just so surprised. The guy's like, yeah, I'm from Romania. So anyway, all right, enough. Let's get into this, shall we? All right. So as you guys know, mitete, yeah, mitete. As you guys know, what was I going to say? Yeah, first, when I do this stream, first we have to talk about the economic calendar very quickly. Then we get into some of the charts. Now, what I want to do special in this stream is, yeah, oh, I loved it. I love the metate and that little treat. I haven't tried that yet. I've been waiting for you to show it to you. Now I can have it. Now that I showed it to you, but it was really good. In fact, I took some home with me, and then I had some. I heated some up and had more. I had more the next day for lunch. I mean, it was 3 sausages, like 3 of them. I couldn't eat them all. It was a little salty, but it was good. And I'm not a big sausage guy, but it was good. I liked it. So you see, I'm prepared. From Romania, I'm prepared. All right. So yeah, Romanian food. Anyway, okay. So first thing we got to do, economic calendar. Then we're going to do the chart, right? We're going to go over a couple of charts, and then what I want to do is I want to go over the Trade Scanner Pro. But we're not going to look for day trade signals. What we will do is we will look for swing trade signals and see if they make sense with the analysis. Right? Because that's one thing where I don't think I get to show the Trade Scanner Pro really much in my streams is on the swing trade time frame. I'm always focused on day trade time frames, right? And it's a lot harder to day trade. So that's why if you can watch the streams that I do Monday, Wednesday, and Friday, because that's a very valuable training session. You can't learn from a book or anywhere what I teach in those sessions about using the Trade Scanner Pro. You're not going to figure it out, right? Because the market changes so much and so quickly, you have to be able to adjust. And I show you how to do it with the Trade Scanner Pro. So check that out. So in this stream, we'll look at swing trades, like in the same way, but swing trades, right? For people that are more interested in the bigger picture type opportunities. All right, cool. So no, I understand. I remember you said you were going to Rome because Romanians go to Rome. But I remember you mentioned you were going to Rome. And I'm like, oh man, when Alex gets back, I got to tell him about the mitate, and I got to show him my little Romanian treat. I know people are like, what's up with this guy in Romania? I'm excited about Romania. All right. Anyway, so let's do the economic calendar first, shall we? So I'm not going to show it on the screen here. I'll just get into it real quick. So first thing we have is oh, by the way, Sam from earlier, when we were streaming earlier, Sam mentioned before 10 a.m. He's like, oh, there's going to be something at 10 a.m. And then 10 a.m. there was this big pop. I didn't realize there was a news item. There was a particular news item at that time because I hadn't checked my calendar yet. And anyway, that was interesting. And we were like, oh, he must have a crystal ball. And then that was today. Okay. Now we have the next big item this week is the FOMC meeting. That's on Wednesday, the 7th, FOMC. That comes out, the announcement comes out at 2 p.m. Eastern time, followed by the press conference at 2:30. Now, that is a big deal, and that can move markets in a dramatic way. You must be paying attention. Now, here's the thing. There's sentiment that surrounds that, especially right now. It's very sensitive. The Fed is expected to cut in the June meeting. They're expected to cut by 25%. I don't know if the probability of that has changed, There's like a probability tool that you could look up online that shows you what the expectation is. Now, here's how you use this information. If there are any surprises on Wednesday, like for example, he says, oh, we're going to cut this meeting because whatever, the market is not expecting that. If he has like some sort of surprise cut like that, the market will go vertical, bullish, because it's not priced in. There's a very small chance that he cuts, right? So it's not priced in. Or if he says something like, because they're going to be looking for guidance at the press conference. If he says something like, everything's good, we're probably not going to cut in June. If he says anything like that, the market will go to the bathroom. I usually use more vulgar words. The market will go into the toilet very quickly because that's not priced in either, right? So you have to recognize that. You have to recognize, what's expected versus what actually comes out, because the market has certain things, certain expectations priced in, and if he changes that, then you're going to get wildness, right? And you have to be prepared for that. That's why it's usually not a good idea to have trades going into it. There are strategies where you could bracket the market and try to play both sides with orders on both sides. The problem with that is if you're doing it through a prop firm, most prop firms will not allow you to do that bracket trick because it works, because it makes money. And you could trade like some real size with that and cause all kinds of problems for the prop firm. So they'll let you take one side, but they won't let you take both sides. And a lot of them won't even let you trade news events at all because, because it kind of, you can have a little bit of an advantage there, right? So that's one thing to keep in mind. So that's the big event for the week. The markets are probably going to be reluctant, especially going into the meeting. So you want to just keep that in mind. Like today, we have like it's been like slow grind bullish for a lot of the day. And that may have something to do with the FOMC environment. Plus, we're now in May, and May is usually when volume begins to taper off. Okay, now we're going to like the bottom of volume, which usually appears in August. But anyway, so there's that, and then there's on Thursday, I believe, it's Bank of England has their rate announcement as well. Now, that's nowhere near as important as the FOMC. So those are the only two items worth mentioning. Like if you trade the pound or you trade pound crosses or whatever, then that meeting, for the Bank of England, it's going to be more significant. Otherwise, I wouldn't really pay much attention to it. And those are the two items worth mentioning this week. Okay, Alex, let me see. I can't see that type. What do you say there, Alex? The Mitete story is that a guy in Bucharest, anyway, so he just cooked the meat without, interesting. Yeah, because it was skinless sausage or whatever. That's funny. Now you remember, you Romanians, I don't know, got a story for everything. But no, but it was really cool. It was really, I thought you'd appreciate my Mitete story. So, yeah. All right, so you guys got the FOMC. We got that out of the way, right? All right. That's all I would worry about this week. I haven't seen any, I don't know if there are any major stock reports coming out this week. I haven't checked that calendar, but that's going to be important if you're in any particular stocks or, if you're in a index for a longer period of time. Now, let's get to the charts, shall we? We're going to begin with Bitcoin. I'm going to make this chart bigger. We're going to use this chart over here, the chart with no price on it. We're going to use this for our swing trade situation, okay? When we get to the swing trade part of the stream. So let's start with our daily time frame. That's what I have here. And this is the analysis. This is the chart that I published on Sunday. Okay, I hope you had a chance to take a look at that. I was calling for this pullback, and it looks like it's on its way. But let me tell you, when markets hesitate like this is a very hard market to trade because, you get part of the move and then it just like stops. And you're like, man, what is this? So this is tricky. You have basically this little trend line situation right here. If it breaks that trend line, then you're likely to see some follow through, perhaps for a retrace to 90K. Maybe the FOMC is enough of a catalyst to get that going if that's the case. The FOMC has potential to be such a catalyst, but Whether it turns out to be or not is another story, because obviously, if the stock market rallies, this is probably not going to sell off because it has that correlation to the stock market, particularly the NASDAQ, right? Makes sense? So now you notice here I have a wave count. These are like minor waves, right? Minute waves. And I have basically 4 waves. It's an impulse. Since we had that breakout from 90K, we have an impulse. Impulses, especially when you can complete 4 waves, right? That's the most probable structure you can use in your forecasting, because it requires 4 waves to meet certain rules. And we're possibly in this little minute wave 4. Who knows if it goes to 90K? Maybe it does. Maybe it finds support sooner. But either way, once this little wave 4 corrective leg completes, wave 5 is highly likely, and wave 5 should compromise the high of wave 3, okay, of minute wave 3 over here. You see that? So that high is 97, basically 98 even. So that's what the mini wave 5 implies. Now, this entire structure, in my opinion, is the beginning of the broader wave 5. That's wave 1, right? If this completes like that and we have that rally to the higher high, that's wave 1, in my opinion. It could be, now, I could be wrong. It could change this and that. But if that's wave 1, maybe we get some kind of wave 2 consolidation, right? And then once wave 3 appears, that's the wave that can take this thing to 109 and higher. And that's why I believe we're on the path to 109K right now. As long as this structure stays intact, this is a wave 1. Wave 2 can pull back as far as the bottom of wave 1. It can do that. But if Bitcoin's generally going to be strong, I suspect if we get a pullback like that or some sort of consolidation, I suspect it to be minor, not going below 90K. That's what I suspect. I could be wrong. But based on this strength, based on these levels, I would be looking for something like that. And if the market confirms something like that, you should be confident with a swing trade, especially if you get like a swing trade signal from the Trade Scanner Pro off of such a scenario. And then you're looking for that wave 3. Wave 3s are never the smallest wave. That's part of the rules. Never the smallest. Usually wave 3s are very dramatic, very big. This right here is a wave 3, right? It's a very dramatic move. And it's usually what gets everyone excited. So a larger magnitude wave 3, in my opinion, can get this thing back up here. Okay, this is the 109K high up in this area. Right, can easily get us back up there, easily, and actually should go through, and we should see a higher high. The wave 3 that I'm describing should be a higher high, meaning 113, possibly 120. Now, I don't expect that to unfold like in a couple of days. That could continue over the coming quarter, right? If the catalysts are right for something like that. I think the potential is there. That's what the wave count is saying. Now, remember, the wave count does not actually forecast the future. The wave count just gives us a sense of expectation. It's sort of like a roadmap, okay? Like, well, if wave 1, 2, 3, and 4 are in place, right? And then we get the overall wave 1 of 5, and then we go into a wave 2. We're expecting a consolidation. Wave 2s are typically consolidations, 2s and 4s, right? As part of a bullish impulse or bearish impulse, as part of an impulse. Then you get the next trend move, which is wave 3. So, with that roadmap in mind, it can kind of give you some confidence as far as maybe putting on more. You add to your position, expect more, have more aggressive profit objectives, that kind of thing. That's how it helps you adjust. And if you see some noise, maybe some red candles or whatever, you shouldn't be so quick to get out or so scared out of the position because we're in a generally bullish impulse. Does that make sense? That's very important. And if Bitcoin is going to behave this way, right? Like wave 2 can basically take us back into something like this, right? That would be like a wave 2 area. And maybe it consolidates inside of here, something like that, before wave 3, right? You get like a consolidation, and then wave 3 breaks out. That breakout right? That breakout is one that you should be very confident with. Now, like for example, I'm not very fond of breakouts, right? Breakout strategies. I prefer the fake out, trying to get the fake out. But there are certain situations where you should not argue with the breakout. That's the type of situation where you do not argue with it. Like chances are, if that thing breaks out, like if it's in a wave 2 configuration and that thing breaks out, you're in a wave 3 most likely. You want to be long that. You want to be long a wave 3. At least take the chance that it's a wave 3. If it fakes out, you stop out. Okay, whatever. Make sure you define your risk. But if you're going to take a chance and you're going to be aggressive, that's the breakout. Okay, not this one. This is the wave 5. If you know this is, you have to be a little more conservative with this one. Now, look, I could be wrong. Maybe it extends. I don't know. But the scenario I'm describing would be more compelling. You get that like that wave 2 consolidation, and then you look for that breakout. Okay, like this wave 5, for example, may just go up to here. This mini wave 5 may just go slightly beyond the mini wave 3 before it consolidates. A consolidation, by the way, may not be as large as I pronounced it there. It may be like something like this, right? It may be just a couple of, maybe something like that. It's just you have to be prepared for it. Does that make sense? Okay. So that's my Bitcoin analysis. And this is important for altcoins as well, because if Bitcoin, the leader, is doing that, then altcoins are probably going to get a boost as well. Maybe not all of them, but generally altcoins should be bullish if Bitcoin is going to do, uh, start moving back towards its high. So, I mean, you could take a quick look, like how does this compare to some of the other altcoins? Like, what does Litecoin look like? I mean, Litecoin is, as you can see, it's not as compelling as Bitcoin. It's just, but it's not selling off either. It's just it's relatively weak to Bitcoin, it looks like, right? But if Bitcoin has a move, these things tend to play catch up, right? What about XMR, right? Everyone's favorite. Oh, look at that. That's new. Oh, that's Monero. I was thinking of the other one, XRP. This is new. New information on Monero, is it? Oh, no, that's not that new. Sorry. I was just confusing this. Let's check out XRP USD, right? I mean, look, again, look at XRP. It's consolidating. But this situation right here is typical of, if this is your wave count, right? If this is basically your 1 to 5 all the way up here, right? This is 3, this is 4, okay? And this is 5. Then this is your wave 2 consolidation. That's what this is. That could be a wave 2, that could be a wave 4. It tried to break out a couple of times, it failed, but of course, if Bitcoin is the leader, remember, I mean, what led to this to begin with? What was this to begin with? What was that? That was the election. What was Bitcoin doing during the election? Vertical, right? So keep an eye on that. These formations start breaking out. Like Bitcoin leads, and then these things start to follow. You can get opportunities in places. Now, there's no guarantee that they will follow, but you know what I'm saying. You want to be prepared, okay? That's why we're doing these charts. So you have an idea. I hope you're taking notes. Okay, next. Let's take a quick look at some other markets here. Now, if you have a market, guys, let me know. We're gonna take a quick look at the NASDAQ. Let's go to the Qs. QQQ. Now, talk about faking people out. This is, I mean, guys, remember when I was long? I'm out of this thing now. I got out, of course, at a bad price. But what else is new? We're at 487 right now. We've been higher. I got out at 464. That's where I was assigned for break even on the shares. And look, we're like 20 points higher. All right. But I wasn't taking any more chances at that point. Once I had my opportunity to get out for break even after sitting in it through all this, I got in a little too early. I took too much pain, and I was like, all right, I got to get out of this thing. So I was happy to get out break even plus all the premiums I collected, right, which was about 2K. So I was happy with that, but I would have made more money if I just had stayed in. But whatever. I wanted to reduce the risk or get out of that risk. My point is, do you remember all the nonsense? Do you remember all the talk, right? All the tariff, blah, 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 blah. How come no one No, none of these renowned economists and bankers and experts. And how come no one, except for the guy running the country, how come no one said, "Hey, don't worry, this thing's going back up to 490"? Not one effing person was saying that, right? There, and I remember when I sat through this pullback over here, and they were saying, "Oh, yeah, you're gonna get caught in the thing, and it's a blah blah blah, and it's just a bull blah 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 nothing." Okay, we got the higher low, made the higher high. So once again, never listen to people, especially on YouTube or TikTok or Twitter. Never listen to people. Listen to the chart. Okay. If and my problem was I started too early accumulating and too aggressively. If I had just waited a little bit, and of course we'd always say this after the fact, and I was just accumulating more conservatively, meaning like 5 shares at a time instead of 10, I would have had a much better position, a much more comfortable position. I could have taken more pain with confidence, and I would have held it longer, most likely. Okay. Of course, yes, I can say that after the fact. But my point is, don't listen to people. Okay. Um, listen to lizards. All right. Yeah. I wouldn't listen to them either. Although they probably make more sense. So, as far as the analysis goes, all right, where are we on the NASDAQ? And what's within reason now? So now we're at a resistance. Okay. Now we're at a resistance worth mentioning. And this is a place, if you are not long, now is not the time to get long. You had all that opportunity, right? You had the pullback. You had all that. When everyone was pooping in their pants, that was your opportunity. Okay. So I see your question, Alex. Hold on. Let me just make it bigger. The only Romanian. Oh, yeah, I remember that. Sure. Romanian lead company from Romania. Yeah, we'll take a look. Sure, Alex. So if you're not long from the tariff drama period, now is not the time. Okay, not even small. Like I wouldn't like you would think, oh, maybe you should start accumulating. No, because now I know the supports, right? Now I know the levels that I would be interested in, and we're nowhere near them. So this is resistance. If I was going to do anything here with the Nasdaq, and this also includes the S&P or any major index, shorts. Okay, if you're aggressive and you want to take a short, like this is the place to think about that. And the way I would do it, by the way, is with a vertical spread, right? Vertical spreads you can do on the SPX, right? You can do a short call above and a long call above that, and you don't have to worry about assignment risk. Now, at this moment, see what you have here is you have the location. The location is interesting, but there's no signal, right? You have an inside bar that's developing right now, and that's going to close, obviously bearish, right? Looks like we're going to close that way because we only have like less than a half hour before it closes. Hey, Hussein. Man, this is round 2 for Hussein. Sat through the first session too. Thanks again for stopping by again, Hussein. Good to see you. So my point is, if we get the inside bar close and we break the low tomorrow, that would be a sell signal. Now, inside bars are not reversals. They can also be continuations. You have to be careful of that. And remember, Wednesday can change everything. If there's any surprises at that FOMC, it doesn't matter what I could say about the chart. Wednesday can look like this very easily. Okay, or it could look the opposite way. We don't know. A chart's not going to tell us that. We need Chairman Powell to tell us that. So that's why I wouldn't be in a hurry to go short. That's what I'm saying. It's aggressive. Now, you could wait until after the FOMC. If FOMC is bearish, and we get an outside bar like that from FOMC, then that would be a great short signal, implying that we're likely to see lower prices over the coming week or weeks, right? If we get something unexpected by the Fed that's bearish. Okay. Well, I appreciate that, Hussein. But again, I only cater to sophisticated people like yourself. because only you and UTXO and a couple other guys, Alex and maybe two other people, find my talks interesting. I find them interesting too, but I need the Ferrari behind me, and then more people will find my talks interesting. Got to work on that Ferrari. So anyway, but I appreciate you stopping by again. So like I'm saying, the outcome of Wednesday, that FOMC is going to be a big tell. And maybe it's a non-event. Maybe he keeps everything stable and says, yeah, we'll see how things go and blah, blah, blah. And then he's expected to cut in June. But like I said, if there are any surprises, that could set the tone for a trade, a swing trade. And, if I see that outside bar bearish, that's going to be one thing. Now, what if we get the bullish outside bar? Because we're in a location for a bearish outside bar. that would be ideal at such a location, right? If we get the bullish instead, maybe he says, I'm cutting early. I'm going to cut early because blah, blah, blah. We'll see vertical that way, right? And then we'll be seeing breakouts in that situation. In that scenario, I mean, you can consider like the short put with the bull put spread, because you want to take advantage of the time premium. I wouldn't go with the longs. Like I wouldn't do the call spreads, because it's just, it wastes the time value. It's just not worth it. Like you just don't make any money. You're better off with the short side, collecting the short premium. And you can only really do that with the SPX. So you could use the NASDAQ as a reference. The charts are going to be the same. You could pull up an SPY chart. It's going to be the same thing. Okay. If you don't know what I'm talking about, then just forget everything I just said. All right. Well, thanks, Alex. Right. Yeah. To you, maybe. And to a couple of guys here. Most people, if I don't have RSIs and all kinds of stuff and I'm not driving my Ferrari at the same time, no one cares. I even show good trades. No one cares. I'm even a CMT. No one cares, especially about the CMT. All right. So you guys get that with the cues? Like the whole point of this stream is we're just looking at a couple of scenarios here. What can we see and how can we capitalize? Right. So, I mean, I'm more compelled on the short side with this for like a swing trade, and I would use options, and I would probably do it with the SPX, and I would do a short call, right? I would do the bear call spread for something like this, because you know why? If the market takes its time to sell off, I'm making money on that time premium. If the market jumbles around and is a pain, forget it. It takes forever to make money on those long spreads. I've been trying long spreads, and they're just very hard to make money with. Like they're just I don't know. I think on the short premium is just better. If you can get away with short premium, you don't make as much money, but your probability is better. And you want to make sure that you avoid the assignment risk. That's why it's important to do SPX. Otherwise, you have to face assignment risk. And that's not cool, especially if you can't afford the shares. All right, so that's the cues. That's what I'm looking at with the cues. I don't pay attention to anything else. I don't care about expert opinions. I don't care about all the economists. I don't care about recession nonsense, blah, 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 blah. Okay? It's all blah, blah, blah. Let's take a look at Path, right? Let's look at the Romanian company. We'll take a look at that real quick for Alex here, because then I want to do some Trade Scanner Pro. We want to look at some swing trade ideas and see how it aligns with our overall context. So here's Path from Romania. I have to make sure I put that in there. And let's see, Alex, I guess Alex is long this, or he's interested in this. What do you have a position in this, Alex? Let's see. Okay, so I'm looking at the weekly chart here. And yeah, this thing got beat up, huh? Okay, going back a couple of years there. So here's what I see. I see a high, but this is a massive lower high right there, as you can see. Uber and AMD. Hey, Axel. I'll take a look at one of those. Pick one, Uber or AMD, because I want to do Trade Scanner Pro. Or maybe what I'll do is we can look at one through the eyes of Trade Scanner Pro. So, Alex, as you can see here, we have a lower high. We have a lower high. These are lower highs. Okay? Lower highs lead to lower lows, typically as signs of weakness. This thing is respecting resistance levels. So right now, as you can see, it's trying to pop up. It's coming off of looks like a failed low, but you're still struggling here with lower highs. So I would not be optimistic about this one yet. It's you're at attractive prices, but man, I mean, let's kind of zoom out a bit here. Yeah, this thing is doesn't look like it's going anywhere anytime soon. So all you can really argue is, well, you're not buying the highs, that's for sure. But this thing is still exhibiting weakness. It's likely at this point, in my opinion, to actually test the low again before doing anything else because its current move there. Look, I mean, you're actually getting near an old support, which is likely to act as resistance. You see that? So remove the other lines to avoid confusion here. So that's a minor resistance, and it looks like it's even hesitating there. So I would not be interested in new longs, that's for sure. If you're accumulating, I would not really be aggressively accumulating. I'd be more conservatively, maybe smaller bites, and really I would be waiting for resistances to start breaking. That's your first resistance. You got to break that, right? Or you produce the lower high, you fail to make the lower low, and then it breaks that resistance. That would be at least a new piece of information, a positive sign. But this thing has a long way to go, it looks like, because there's no bullish structure in sight. Does that make sense? So, accumulation wise, I would be extremely conservative or just no accumulation. I just wait until this thing shows a more positive structure. Okay. Pretty much beat up. It looks like it's right. So it's trying to form a base. It's trying, but forming a base is one thing, right? Changing its tune is something else. So you could form all the base you want, and it's still going to keep breaking supports until it exhibits strength, right? And the first sign of that is going to be break resistance. Got to break resistance. The fact that it produced this little double top failed high situation, like that's certainly a bad sign if you were long, or if you were thinking about buying a breakout or something, breakout, and you saw that, be like, okay, hold off. That's not what you should be seeing. In fact, because you have this this bearish movement right here. I mean, look, it couldn't even break the 50% of that, right? So just a lot of bearish signs there, and definitely would be a hold off. Wait, if you have some, just sit on what you got, and maybe you believe in the company, the long run, whatever, and that they'll eventually do better. Hey, you're certainly going to get better prices, and it looks like you may have some better prices to go here. Okay, so that's the thing, right? Because it's very easy, Alex, to be like, oh yeah, basically. I mean, I know this because I made this mistake 10 million times, especially on smaller time frames. You think you see a double bottom, or there is a double bottom, but it's never proven any strength. I've learned over time it's better to get in at worse prices, but to have momentum going your way, rather than getting great prices, but momentum is not going your way. And all you're going to do is face even better and better prices as you watch your money melt away, right? So you're better off getting worse prices. Now, it doesn't mean avoid this thing completely. If you want to take some small bites here and there as it's stabilizing, go right ahead. Just, I wouldn't be extremely optimistic about it, right? This would not be like a priority to accumulate. You know what I mean? And then when it starts breaking out, when it starts showing those signs of strength, something along these lines, and even here, it was showing some promising structure before it gave it back, right? So you have to even be careful with something like this. Even this was confusing because this was giving you the higher lows, gave you the breakout and everything, and it still broke supports, right? Still broke that support, which it should not have done, and then produce the lower high. So you always have to be open, keep that open mind in case, you start to get those positive signs. If it starts to turn negative again, you don't keep putting on more and more and more. You understand? I don't have to tell you that. I'm just explaining that for people that, who may not be familiar with that type of mindset. Okay, cool. So that's path. Now we had another request here, AMD. AMD. Oh, so wait, Axel has another question here. I'm just seeing the chat here. Do you do weekly forecast on Qs or SPY? Yeah, well, I mean, Axel, I'm on the weekly chart right now. So I pretty much covered the Qs. And The SPY and the Qs are going to be the same thing. It's just the numbers aren't going to be the same, but the charts look the same. I mean, I'm not going to go over them again. The Qs, but look, Q, 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 right? That's the weekly Q, Q, Q. I was on the daily before, I guess. So Q, 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 and SPY. Do they not look exactly the same? If I had not told you what chart that was, I could have said, oh, yeah, it's the Qs, but it's a SPY. It's the same thing. So all the analysis that I said about the Qs is going to apply. Look, I can just back and forth, right? Basically, it's the same. The prices are a little varied, but it's the same thing, same chart. So same outlook. And then we'll take a look at AMD. All right. So here's AMD on the weekly. Usually when I'm looking at these bigger picture, I like to look at the weeklies because that's really where you're going to get a sense for your bigger picture. Because we want to see like kind of how it compares to like recent history and levels and things like that. So this is AMD. Obviously, AMD is a market stock, a big semiconductor stock, and it's got beaten up. I mean, look at this, right? Look at this. So this is bearish. It's trying to recover a bit here in an area. I mean, look at these supports on AMD. Look at this. Coincidence? Failed low double bottom situation? This is the election right here, right? This is the infamous election. Failed low vertical, right? Breakout, higher low breakout. And then, right, since then, it's right back into those prices. Interesting, right? So it found some support there. Clearly, it's trying to develop and hold, but it hasn't changed any bearish structure yet. Here's another question here. Let me see. Okay, yeah, I answered that question. Yeah, so just like that path chart, look, we haven't broken that resistance, right? It's trying, but trying isn't good enough. If you can't break this resistance, then the general trend or the momentum, at least the shorter term momentum, is bearish. Now, look, we could zoom out a bit. This is sort of a mixed chart. The bigger picture was bullish, and the medium picture, the midpoint, the midterm, the middle area, this area right here, that's bearish. Okay, lower highs, lower lows. And then this, of course, short term is bearish, lower highs, lower lows. So the momentum is bearish on this thing. We can argue that the short term trend is also bearish. This thing found some support in an area where support was likely, and it looks like it struggled there a bit, right? But it's basically reacting along with the market. And now it's just fluctuating here, it looks like, right? So I wouldn't be in a hurry to go long this. Maybe if you want to take a small bite or something, but in my opinion, if you're going to play this, how much is this stock? I mean, all right, the Qs are more expensive, but you might as well just buy Qs, right? Because the Qs actually going to perform better than this thing. But AMD is its own thing, and you can get some decent prices here, right? It's definitely on the cheaper side for now. If there are any, this is going to be sensitive, of course, to any China tariff stuff, especially with the rare earth stuff and all that other drama. This is going to be sensitive to that. So you have to be careful with that. That's why I'd rather get involved with the Qs than a specific stock like AMD. Plus, AMD has competitors that may have better advantages than them or whatever. I don't follow the semiconductors religiously. I don't. But there's when you're dealing with a lone company, there's company factors that you have to consider that you don't really have to consider when you're dealing with the entire index. But the index is more expensive, of course. So just something to keep in mind. So as far as structure goes, I would not be bullish about this thing until this thing breaks a resistance. Now, this resistance, where it's at right now, because we just looked at the NASDAQ, right? The NASDAQ looks like it's at a resistance, and we have FOMC Wednesday, and that may assert a bearish situation. If we get that, this thing is likely to sell off right from where we are right now, right? We're likely to see a lower high right here in this area if we get such an outcome, and we may retest the low if we get a bearish outcome. If we get a bullish outcome, then maybe we work our way back up to this resistance. Again, I can't forecast that, The market has to make those choices. I can't. All I can do is assess the levels and then determine if they're worth taking any type of risk. At the current price, I would not take any risk here. Okay. Either if I'm going to take risk, it'd be at the low, which is aggressive because chances are you're going to get a lower low. If this thing tests the low from a lower high, a lower low is likely. So if I was going to buy it, it would be small, very small, like where, because I'd be anticipating the lower low, or just stand aside and let's see how the lower low plays out. Maybe it's not much of a lower low, right? That's how I would treat that. Otherwise, look for the higher low. Maybe you pull back a bit and you get a higher low. That would be promising, a higher low, something like this. And then I'd be looking for the higher high, or you can wait completely until you get something like this, right? It requires a lot of waiting, but maybe you get the higher low, right? Higher low, followed by the higher high, and you wait for that higher high breakout. You don't do anything until you get the breakout of something like that. That would be a change in structure as well, and possibly more of a bullish situation. Sort of like this here. If you look at this back here, going into the election, right? You had a situation where it was just kind of pulling back, giving you lower highs, lower lows, lower highs. Then it gave you the failed low right here, and then breakout, right? From the election catalyst. If you were familiar with the failed low or the double bottom situation, that would have been a confident point to add or begin a position, because it's like, okay, we're breaking out off of a higher low. Double bottom, right? It's compound. Look. Let me point it out with my little square thing here. So you had like this low is higher than these lows over here, and it's a little mini double bottom. So when all that lines up, and then you had the catalyst, right? And you get that spike. That was all, there was nothing bearish about that. So you're looking for something like that over here. Maybe you get something similar. Maybe the FOMC is a catalyst. Maybe the June FOMC is the catalyst that gets this market going. If everything plays out the way the market wants. Okay, does that make sense, you guys? Okay, so that's it on that front. All right, I got a few more minutes here, right? Because I want to just do some Trade Scanner Pro stuff real quick. Let's go back to, let's take a look at, what was the other one you wanted? It was AMD, and it was, hold on, let me go back on the chat here. Let me just go back. What was it? Uber. Okay, yeah. So let's take a look at Uber. Uber. All right. Now what we'll do is we'll turn the Trade Scanner Pro on. Okay. Now let's see. This is a weekly. Let's go to the daily time frame. Anything here? Okay. I'm not seeing any. Let's turn on the. When you get the Trade Scanner Pro, you got to turn these things on. All right. Now, oh look, there is a signal there. Okay. So let's see now. Like I tell people in my earlier stream, you don't just jump on a signal. Oh, it's at the profit objective. You don't just jump on a signal just because a signal appears. But let's talk about if this signal would have made sense at the time. In fact, to do that, what we can do is we can do a replay here, right? I can replay this chart. So, why is it making me do that? Oh, I got it up here. Okay. So I can basically cover up that data, right? Oh, there was another signal there too. All right, let me cover this data up also. Let's cover this up. And let's see if at the time this stuff made sense. So this is the daily time frame, right? You'd be obviously looking for swing trades. Now, let's go forward with this thing. I just closed the whole thing out. Okay, hold on. Let's go back. Let's go back to here. And let's just play these forward. There's obviously a few signals. Remember, on the daily time frame, these signals take days to appear, right? That was calling shorts at the time. But what we're interested in is the long signal that appeared. So let's get back to that long signal. I'm going to play these candles back. This is day after day. There's our heads up, right? That's the first thing. Now, the question is, the heads up lets us know a signal is likely to come soon. In this case, next 3 to 5 days. It's 3 to 5 candles. If I'm on the daily time frame, that's 3 to 5 days, right? So I'm getting a bunch of heads up. The question is, does this make sense for a long? We have to do the analysis first. Now, of course, we have the benefit of hindsight here. But what the question I want to answer is, would this been a worthwhile trade based on the structure that was available at the time? Well, look at this. Higher low, right? Higher high. Okay, pullback. This is a pullback. This is likely, there was no signal over here. Okay, we're starting to get a signal here. That looks like a higher low. Does it not? Compared to this section right here? Higher low, right? So that may, without doing heavy duty analysis there, that may have made sense for a long. Also, notice this. I could draw a trend line here, like a counter trend line. If that counter trend line were to break, that would also be a long signal. So you have some arguments for longs there, okay? You don't have to spend a lot of time to figure that out. So now let's play this forward and see. Look, now there's the long signal. And a long signal would have made sense here. The nice thing about these larger time frames is they don't change very often, right? So this is the long signal. How much risk was involved? 6.5 points. 6.5 points of risk. So on 100 shares, you're looking at $650. Okay. And then your reward opportunity there, 990. So basically 10 points, which should roughly be about 1.5 to 1 reward risk, right? So how does this trade play out? Let's see. Now, of course, we have the benefit of hindsight. Now, this is playing out over days. You got long at that blue line and you're watching this thing for days. You watch it, it was green a little bit. Now it's back to break even. There could be company reports during this. I mean, look at that candle. It's giving you a hard time. Oh, stopped out. Okay, it stopped out at the trailing stop. So let's go back. That trade, based on this, was a loss of 5.35 points based on that stop loss there. Okay, that's how it calculated that. So that was a loss. All right. Has this thing changed? Well, it broke that support. That looks like a lower low. Let's see what comes next. It's still looking for longs. Look, another long signal. All right. Does this one work out? Let's see. Now, first of all, does it make sense to take the long? Just looking back here a bit, has that pullback really changed anything? Well, I mean, that's a tricky one. Because you could say, well, it made the lower low, and there's sort of a lower high over here. This is tricky. This may be the type of trade where you're like, I'm not going to take this one because it should not have made that lower low. I mean, going back a bit, if we just look at this situation here, I mean, you can argue that there's a support there, and there's not really a trend. It's a consolidation. So you could make that argument. But this one, if you said I wouldn't take that, I wouldn't argue with you. Okay, it's tricky. All right, not all trades are going to be crystal clear. Let's see, does this work out or no? Let's see. This may go straight to the stop too. Let's see. So I'm playing the thing forward here. Now, if you notice, the trailing stop jumps in here, right, and starts to reduce the risk once the trade is in play. Again, these are swing trades on a daily time frame. 8.72, or basically, let's just round that to 9 points of risk for about 13 points of profit, right? That's your reward risk. And you have to sit in this thing for days. That's a swing trade. That 872 is your max risk because your risk is being reduced by the trailing stop. Your risk at this point is 2 points, 2.5 points. Okay, that's the great thing about this. And you're watching this thing. I just advanced the whole thing. Well, as we can see, that trade went to its profit objective. So on this trade, you gave away 6.5 points, but on this trade, you have a profit of what? It says 85. That can't be right. Hold on. 85 points. No. 13 points. All right, so you got the 13 points. I think that must be looking at ticks or something. I don't know what that's looking at, but you got the 13 points. So you lose 6, but you made 13, right? Okay, that's how you get ahead in this game. And at this point, if you have not taken your profit at the profit objective, you have the trailing stop, maybe you can make more. Now, this again takes days to play out. You can also go to a 4-hour time frame and work with it on that time frame. There's probably no signal there, right? The 4-hour time frame, there's no signal. That signal was a daily signal for Uber. Do you see how that worked? So that requires patience. I mean, you got to sit through it and wait days and days as the thing plays out. You could get stopped out. Some news can come out, but it's slower and it doesn't change so quickly. Where like if you watch my streams during the AM session, this up here, trend is bullish, trend is bearish, changes constantly. And you have to constantly adjust, constantly, right? That's what makes it so hard. This, you don't have to adjust so much, right? But the point is you still have to have some sort of analysis done where you're anticipating a reason for your trade. You can't just take the signal just because the signal is there. Make sure that you understand that. All right. All right, you guys. So that's Uber using the Trade Scanner Pro on a swing trade time frame, which is not something I really get to show. I don't really show that very often. All right. Makes sense, you guys? Right. Speaking of that, look, here's a 4-hour Bitcoin. There's a swing trade in play right now. Look at this. Does that make sense? Well, again, you don't just jump in. You have to look at the structure. Is that it's calling for a long? Does a long make sense here? Well, this structure is certainly not bearish. Okay, I see higher lows. We looked at that wave count. We were expecting a pullback, but the pullback seems to be limited. And look at your profit objective. On this 4-hour chart, you're risking 1,600, well, a little over 1,600 points. It's a lot to make 25, a little over 2,500. All right, that's what the 4-hour chart is showing. Now, do you take something like that? Well, that's going to depend on you. Like, I don't like to trade these time frames. I don't like taking that type of risk, but you could just trade smaller. Now, the bigger picture that we analyzed earlier, we're looking for the pullback, right? And the pullback, if this thing goes to the stop, then this thing is probably going to pull back toward that 90K. So there's a signal there, but this signal is iffy because remember what the bigger picture said. We're coming off of that wave 3. We're looking for that wave 4. This thing may not, this is a lower probability, just with that in mind. That's why you have to do that homework first. Instead of, oh, this looks good, I'm jumping in. I believe based on that analysis, there's a lower chance that this thing gets to the profit objective. Okay, it may still get there, but I believe it's a riskier type of trade because the bigger picture, you're coming off of a resistance area, that 95K resistance. Now, if this signal occurred at that 90K support, now that's compelling. Do you see the contrast? Because you know the 90K support. And that would be a pullback on the bigger picture. And the potential from 90K would be enormous. So that's why you don't jump into this blindly. It may work, but so if I were to take this trade, I would go in a lot smaller and I would expect a lot less. And if it gave me a hard time, just get out. Because it's a bad price. It's a bad price area in general. But it doesn't mean the momentum will fail. Does that make sense? Okay, so all right, you guys. So pretty much that's what I wanted to cover on this stream, and that's how I wanted to show. Oh, we never had to use this chart over here. I wanted to go over some levels with some markets, and also show the Trade Scanner Pro from a swing trade time frame, right? So that you guys can get some perspective from there as well. If you haven't checked out my earlier stream, check it out because everything I just applied here, I apply much faster. It's harder. It's a lot harder. So that's why these time frames are much slower, but you still have to have that same mindset and you still have to do your analysis first. And the Trade Scanner Pro has to agree with you, not the other way around. You come up with the idea, this confirms the idea. You don't pop this thing up and then try to make it work. Like, it doesn't work like that. These things could be random. All right. All right, you guys. So again, I appreciate your time with me here today. I hope you got some value from this stream. Do me a favor. If you're watching me on Twitter, retweet the stream if you can. It helps me out. Press the like button on YouTube. Subscribe if you haven't. I appreciate that as well. And if you haven't checked out the Trade Scanner Pro, subscribe for 14 days. It's free. If you don't like it, you can cancel. Just make sure you cancel before the 14 days. All right? That's all that I ask. All right, everyone. So thank you for watching. Enjoy the rest of your day, the rest of your evening, wherever you are in the world. And thank you.